So, what is the most bulletproof real estate exit strategy? Recently, I've been getting a lot of clients coming to us because there are certain areas of the country that are absolutely falling apart, and real estate is being put under massive pressure from increasing holding costs, whether that be massively rising HOA fees, insurance costs, property taxes. It's all starting to really stack up, and especially with rising interest rates and rates being as high as they are, you're seeing a lot of areas in the country where real estate is just a lot more undesirable than it used to be. And prices are definitely coming under pressure in some areas. So let's say you're an investor and you're in an area and you want to get your money out. A lot of real estate investors, when they're trying to avoid a capital gain event when selling a property, they typically do a 1031 exchange. But the issue with that is, okay, now you have to buy another property. You have to stay in real estate, and maybe you don't want to do that. Maybe you want to exit at least some of your money and move it to a different asset class, diversify, whatever the reason may be. So if that's the case, how can you sell property without triggering a capital gain event? That is really the question. And again, what it comes down to is who owns the property. So do you own it in your personal name? Most lawyers and accountants even will tell you that that's not a good idea. So they'll direct you to LLCs or some kind of corporate entity. But when we look at the best asset and legal protection within the matrix, it's going to be done in a private express trust. So once you hold your properties using this trust, the 508c1a trust, now any sale or any transaction within that trust is completely tax exempt per the IRC code. So it's a very simple matter of, now you have your property portfolio and you want to sell properties. So you open up a trust, this trust, you quit claim your assets into the trust. That can be done in a single afternoon. And then now, whenever you go to sell those properties, the trust owns it. You don't own it anymore. And so the trust will receive the proceeds from that sale directly into one of the trust bank accounts that you set up. And the IRS knows that that's a tax-exempt sale because that bank account, that trust bank account, was opened using a very specific irrevocable trust EIN number that is exempted along with your trust paperwork. So then you can buy and sell properties at will. You no longer need to do 1031 exchanges or worry about where you're going to put the money. You can just keep it in cash until the next deal. Or better yet, you can set up your own private family banking system to store your cash and then make that available and still earning a strong rate of return while you can leverage it for future deals, which is what many of the billionaire families do. And it's how all the top family offices preserve and perpetuate their wealth. So if you are a property owner and you're thinking about exiting property and you want to see how this trust can work in your situation, then definitely feel free to send me a message and we can discuss more about how this blueprint can completely eliminate any kind of capital gains event in your portfolio. So, talk to you soon in the next one.